This video is created by Jagrat Creation. It is on bank accounts. I wish to explain the contents of profit and loss account prepared by the bank. So observe how the profit and loss account is prepared by a bank on the screen. First of all, the Form B prescribes how the profit and loss account gets prepared. For the year ended on 31st of March, figures are in thousand. Here you are required to present the previous year figures. Here you are required to present the current year figures. The profit and loss account is bifurcated into two parts mainly. One is income, second expenditure. The incomes are bifurcated into two sections. Interest earned. You have to identify the various interest earned income by preparing Schedule 3. I will explain you Schedule 3 after a couple of minutes. Other income. Other incomes are reported by preparing Schedule 14. I'll explain its content after explaining the basic layout of profit and loss account. Now 13 and 14 schedule identifies the income for the bank. The total of these two gives the details of total income of the bank. From this income, you are required to deduct the expenditure. The expenditures are bifurcated into three segments. First is interest expended, interest paid by the bank or expense of bank by way of interest is to be described by preparing Schedule 15. Its content will be explained to you after a couple of minutes. Then operating expenses are required to be compiled by preparing Schedule 16. After that, you are required to deduct the provisions and contingencies from the income. So provisions and contingencies will be deducted. So total of these three makes the total expenditure for the bank. From total income, total expenses will be deducted. So you will get the profit for the year. So negative sign shows the loss for the year. The positive sign, positive number shows the profit of the bank. So this is how profit for the bank is being found out. To that profit found out for the current year, the profit and loss account balance brought forward out of the previous year profit and loss account prepared. So brought forward balance of profit and loss account is recorded. From that, you are required to deduct the appropriations. The compulsory appropriation is transferred to statutory reserve. Every bank is required to transfer 25% of its profit to statutory reserve as per the requirement of Reserve Bank of India. Other transfer to reserves are also mentioned here. Transfer to government and proposed dividend are also mentioned. But now notice that as per Schedule 3, proposed dividend is not recorded in final accounts, but it is given in this profit and loss account. So I am demonstrating. Balance of profit is carried forward. So after appropriation, whatever the balance is recorded, that is to be presented here. Now I want to explain interest earned. Now the business of the bank is to collect deposit. Out of deposit collected from the people, the funds are advanced by the bank for commercial and non-commercial purposes, and the advances are made by the bank. Whatever the deposit bank collects, on which bank pays interest. Whatever the advances made by the bank collects interest. Suppose bank pays interest on deposit at the rate of 5% or 6%, and bank charges interest at the rate of 10%, 12%, 15% on the advances made. Obviously, the interest received on the advances will be more than interest paid by the bank on the deposit, and this difference in interest is normally identified as profit of the bank. Now suppose that bank got 1000 rupees by way of deposit. Out of that, bank could advance only 400 rupees to the people. 600 rupees are left with the bank. Out of this 600, some funds are required by the bank. Some funds bank has to maintain as a deposit with the Reserve Bank of India. Some funds are required to be maintained by the bank for its operational purpose, and after that, whatever the funds are left with the bank which could not be advanced will be placed by bank in the investment. So, understand one thing, deposits are collected 1000, 400 rupees are advanced, 20 rupees are kept by the bank for its functional purposes and deposit with RBI. So 40 plus 20, 60, still bank up to, even after doing this, bank has a surplus funds of 30 or 40 rupees, the 300 or 400 rupees out of 1000, they may be kept in investment. So main income of the bank is the interest on advances. The another income of the bank is dividend and interest on the investment. The third income of the bank is interest received with the deposits with RBI. All this interest will be collected at one place in a Schedule 13 and they will be presented here in the profit and loss account. Now let me explain the contents of Schedule 13. So here I give you the details of Schedule 13. The first of all, interest and discount on advances and bills. Now interest and discount received by the bank on the advances made, interest and discount received by the bank by discounting of the bill. Now let me explain its details. The second income by way of interest is income from investment. Third is interest on balance with Reserve Bank of India and other interbank funds, and if at all there may be any other interest, that will be presented in the fourth point. So these are the four sub-points. The total of this 4 points is recorded here in the debit side of profit and loss account. Here you are required to write the details of the previous year for comparison purpose. Now let me explain in detail this first point. Now guidelines of Reserve Bank of India for preparation of profit and loss account shows that interest on 1. Interest and discount on advances and bills discounted. Interest on advances. This interest includes the interest and discount on types of loans and advances like cash credit. Cash credit is one mode by which bank advance money to the business class. Demand loans. Demand loans are given either for the project financing. Overdrafts. Overdrafts are given by the bank for short-term and working capital requirement of the business class. Export loans, term loans, domestic and foreign bills purchased and discounted, including those rediscounted, overdue interest and also interest subsidy, if any, relating to such advances. Now see, these are the various interests. Now domestic advances. Bank has advanced money for domestic purposes. Suppose that some X wants to purchase a residential house or a flat. That housing loans are given by the bank to the needy persons. Those advances are known as domestic advances. Now similarly, also interest subsidy. Let me explain the word interest subsidy. Government wants bank to finance funds for agricultural purpose at a concessional rate. So bank gives advance to the agriculturist at the concessional rate. But the difference between the normal rate of advance and the concessional rate charged from the farmer, the difference between the two is given by the government to the bank as subsidy. So subsidy received in this fashion is also a part of interest income. Now, income from investment. The funds could not be advanced, and funds which are not required for the current operations of the bank and funds are required to be maintained with the Reserve Bank of India as minimum deposit. So advances required for operating purpose and the deposit with the RBI After that, whatever the balance surplus funds are there with the bank, they are invested by the bank, and the income from investment includes all income derived from the investment portfolio by way of interest and dividend. Third is interest on the balance with the Reserve Bank of India and interbank funds. Every bank is required to maintain some balance with the Reserve Bank of India, and on that balance maintained by the bank with RBI, bank gets interest. Similarly, banks are also required to keep funds in other banks for the purpose of clearing purposes, clearing of checks by the bank. So such funds are maintained by bank in other banks. On that also interest is earned. That is to be mentioned in this third point. Includes interest on the balances with Reserve Bank of India and other banks, call loans, money market placements, etc. Others are to be specified. Includes any other interest and discount income are to be included in these sales. So this is the detailed description of these 4 points. Now after explaining this thing, let me explain Schedule 14, that is for other income. So this is the other income. Now what are the titles in other income? Commission, exchange and brokerage. Profit on sale of investment minus loss on sale of investment. If loss is more, then the negative number will be reported. Profit on revaluation of investment, loss on revaluation of investment. If the revaluation profit is more than the revaluation loss, then positive revaluation profit will be reported. Profit on sale of land and building and other assets, loss on sale of land and building and other assets. Profit on exchange transaction. Exchange transaction means the rupees are given for the dollars and pounds, or pounds and dollars are purchased. All those are exchange transactions. So profit or loss on exchange transactions is to be represented in this point number 5. Other income, income earned by way of dividends, etc. from subsidiary companies and other joint ventures abroad and in India, and miscellaneous income. So these are the list of items which are considered in other income, and which is the total thereof is reported as a other income as per Schedule 14. Now let me explain these details in detail. So this is the guidelines of Reserve Bank of India. Commission, exchange. Commission, exchange and brokerage includes all remuneration of services such as commission on collections, commission and exchange on remittance and transfers, commission on letter of credit, commission out of lockers and guarantee commission on government business, commission on other permitted agency business including consultancy and other services, brokerage on securities. It does not include foreign exchange income. Now this commission and exchange. Now bank maintains demat accounts. At the instance of demat account, you can transfer the shares from your name to the another person to whom you have sold, and all those demat account services are given by the bank. For that, commission is charged by the bank. That type of income is included in this commission. Over and above, bank transfer funds from one place to another place. For that also commission is charged. Bank also gives you so many other services. Say for example, ATM services, or checks are issued, checks are cleared. All those services are given by the bank. For that, commission is charged, and all those commission and exchanges are covered in this title. Now, profit on sale of investment and loss on sale of investment includes profit and loss on sale of security, furniture, land and building, motor vehicle, gold and silver, etc. Only the net position should be shown. If the net position is loss, the amount should be shown as deduction. Now, these are the assets held as investment. Now, assets held as investment and assets held for use. These two are different things. So, where the assets are held as an investment, whatever the profit or loss occurs on its transfer is to be reported in this title. Profit on revaluation of investment less loss on revaluation of investment. These investments, though not sold, but are revalued, and at the time of revaluation, the increase in value or decrease in value may occur. Increase in value may be identified as gain, and decrease in value may be identified as loss. The investments are held by the bank either for trading purpose, or investments are held by the bank for the purpose of sale, or investments held by the bank till its maturity. This type of bifurcation of investments are required to be made. In light of that, wherever the revaluation gains and losses are permitted to be reported, they are taken care of and reported under this title. Now, profit on sale of land and building and other assets, loss on sale of land and building and other assets, that is the fourth point. These talk about the land and building and assets kept for the purpose of use by the bank. Profit on exchange transaction, less loss on exchange transaction. Income earned by way of dividend from subsidiary companies, joint ventures, abroad and in India. Now see, profit on exchange transaction, loss on exchange transaction. Exchange transaction means banks generally, if you go to the bank and give dollars, bank will give you Indian currency. If you want to have dollars, you have to give Indian currency and get the dollar. So foreign exchange transactions. When the exchange is, bank has purchased dollars at a X price and bank transfer the dollars at X plus 1 price, then plus 1 is the profit. These type of profits are identified the bank and reported under this title. Income earned by way of dividends. Now, income earned by way of dividends from subsidiaries. Say for example, formerly State Bank of India had a subsidiary known as State Bank of Saurashtra. Now the State Bank of Saurashtra gives dividend, and this dividend received by the State Bank of India will be identified under this title. Similarly, joint ventures are also there, in that whatever the income occurs to the bank is identified under this title. Now miscellaneous income includes recoveries from constituents of go down rent, income from bank property, security charges, insurance, etc., and any other miscellaneous income. In case any item under this head exceeds 1% of the total income, particulars may be given in a notes. Now see, other income, go down rents. Now bank finance against the stock. The stocks are required to be maintained in go down, and such go downs are maintained, and the go down rents collected from the customer is identified as miscellaneous income. So this is how various incomes are explained to you. Now after, I want to go for next title, that is interest expanded. Now interest is paid by bank on deposits. Interest is paid by bank to the Reserve Bank of India or other banks on the borrowings taken by the bank from other banks. If the bank has borrowed money from Reserve Bank of India for the purpose of advancing, on advances bank will receive interest, but the bank is required to pay interest on the funds borrowed by it. So interest on Reserve Bank of India and interbank borrowings, others are to be specified. Now interest on deposits. Let me explain. Includes interest paid on all types of deposit, including deposits from the banks and other institutions. Interest on Reserve Bank of India and interbank borrowings. So on the borrowed funds you are required to pay interest. Includes discount interest on all other borrowings and the refinance from Reserve Bank of India and other banks. Others are to be specified. Includes discounting and interest on all borrowings, refinancing from the financial institution. All other payments like interest and on participation certificates, penal interest paid, etc. may be included here. So all these type of interest expenditure are to be recorded. Now next is operating expenses. They are administrative expenses. First, you are required to payment and provisions to the employees. Second, rent, rates and taxes. Rent, taxes and lighting. Third, expenditure title is printing and stationery. Fourth, advertisement and publicity. Fifth, depreciation on bank property. Director fees, allowances and expenses. Audit fees, allowances and expenses, including branch auditors, law charges, postage and telegram, repairs and maintenance, insurance and others expenditure. First is payments and provision for employees. That includes staff salaries, wages, allowances, bonus and other staff benefits like provident fund, pension, gratuity, liabilities to the staff, leave and fare concession, staff welfare and medical allowances. So all staff related expenses are reported here. Next is rent, rates and taxes and lighting. Rent paid by the bank on the building and municipal taxes paid, excluding income tax and interest tax, electricity and other similar charges and levies, house rent allowance, and the other similar payments to the staff should appear in the head of payment for provisions and contingencies. So if the staff is granted house rent allowance or house rent is paid for the staff quarters, those expenses should be included in the first title, payment and provision for employees. This type of rent should not become a part of this second title. Third is printing and stationery. Very simple to understand. Includes books and forms and stationery used by the bank and other printing charges which are not incurred by way of publicity expenditure. So printing for publicity should be identified separately, but printing for office purposes should be covered under this title. Advertisement and publicity includes expenditure incurred by the bank for advertisement and publicity purpose, including printing charges for publicity purpose. So printing charges for publicity purpose should be included in advertisement, and printing charges for office administrative purposes should be included under the title of printing and stationery. Fifth, depreciation on bank's property. Depreciation on bank's property, motor cars and other vehicles, furniture and electricity fittings, vaults, lifts, leasehold properties and non-banking assets. What is non-banking asset? The bank has advanced money on the security of asset. If the advances could not be recovered, then the bank take the possession and the ownership of that asset for which the loan was advanced. Those type of assets are identified as non-banking assets. Director fees, allowances and expenses. Sitting fees, all other items of expenditure incurred on behalf of directors. The daily allowance, hotel charges, conveyance charges, etc., which, though in the nature of reimbursement of expenses incurred, may be included under this head, similar expenditure of local committee members may also be included in these heads. So this is simple to understand. Then audit fees. Includes the fees paid to the statutory auditor, branch auditor and the professional services rendered. All expenses for the performance of these duties, even though they may be in the nature of reimbursement of the expenses. But important point, if the external auditors have been appointed by the bank themselves, external auditors are appointed by the bank themselves for internal inspection and audits and other services, the expenditure incurred in that context, including fees, may not be included under the head shown under the may not be included under this head, but shown under the head other expenditure. So the auditor appointed for the internal administration purpose, those audit fees should be covered under other expenses, but it should not be covered under the title of audit fees. That's an important point to be understood. Next, law charges. All legal expenses and reimbursement of expenditure incurred in connection with the legal services are to be reported here in point number 8, postage and telegram. Easy to understand. Then repairs. All the repairs and maintenance expenses for the bank's property and their maintenance charges are to be debited, are to be reported here. Its total will be reported under Schedule 16. Then insurance. Insurance charges of bank property, insurance premium paid to deposit insurance, credit guarantee corporations, etc. to the extent they are not covered from the concerned parties. Now see, this is an important point. Bank collects deposit. Now, in case of default of bank, if the deposit holders are not paid, so there is a risk for the deposit holders not being paid in case of insolvency or default of the insolvency of the bank. Now, to cover this risk, the insurance is taken by the bank to safeguard the interest of deposit holders. And for that, insurance premium is paid by the bank. Sometimes, some part of the insurance premium is collected by the bank from the customer also. So, net amount paid by the bank for such insurance is covered under this insurance charges. Now, other expenditure. All expenses other than those not included in any of the other heads, like license fee, donation, subscription to the papers, periodicals, entertainment expenditure, travel expenses, etc. may be included under this head. In case of particular item under this head exceeds 1% of the total income, particular may be given. So this is a concept of materiality. So if any expenditure more than 1% of the total income, that expenditure is considered to be material to be reported. So here 1% of the total income, the expenditure equal to 1% of the total income or more than that should be reported significantly. That is to say, that's a concept of materiality. This is how all other expenditures are to be recorded. Now, provisions and contingencies include all provisions made for bad and doubtful debts, provision for taxation, provision for diminution in the value of investment, transfer to contingencies and others. Similar items are to be shown under this title. Treatment of accumulated losses. Where preparing the balance sheet, the profit and loss account, accumulated losses should be brought forward under the item 3. Brought forward profit and loss account. So previous year balance of profit and loss account. If it is a profit positive balance, loss negative balance should be recorded here before the appropriation of the profit is made. So previous year profit and loss must be considered before you go for appropriation. Now, so far as the appropriation are concerned, every bank is required to transfer 25% of its current profit to statutory reserve as per the requirement or as per the compliance required by the Reserve Bank of India. Any other transfer to reserves are to be demonstrated. Transfer to government or proposed dividend. Proposed dividend is now not a recommended course of action as per Schedule 3 of the Companies Act, but it is there. It is found in this profit and loss account of the balance sheet, so I demonstrated. Balance of profit and loss carried forward to the next year is to be reported. So this amount and this amount is going to be equal, and the difference is found out as the balance carried forward. This is how the profit and loss account gets prepared. So I have tried to explain you the contents of profit and loss account. Now I'll prefer to take few sums based on preparation of profit and loss account in my next videos. I feel that you have followed all these things. Thanks to all of you.